Welcome to Business Decoded, where we break down how companies really make money. Let's decode today's business model. OpenAI loses $5 billion every single year. Not revenue, not profit, pure losses. $5 billion burned annually while everyone from Microsoft to SoftBank keeps pouring money in. This is the most valuable startup on earth and the biggest money loser in tech history happening at the same time. The math is genuinely impossible and gets worse under scrutiny. ChatGPT costs approximately $1 per conversation in compute expenses to run GPT-4 level responses. The vast majority of users pay absolutely nothing and use the free tier. Premium ChatGPT Plus subscribers pay $20 monthly for unlimited access. Run the unit economics on unlimited usage at $1 per conversation cost. Heavy users consuming 50 conversations monthly cost OpenAI $50 in compute while paying $20 in subscription revenue. OpenAI loses $30 monthly on their best paying customers. At scale, this is catastrophic. By the end of this video, you'll understand how OpenAI burns $5 billion annually, why the business model is fundamentally broken, and whether the biggest bet in tech history pays off or collapses spectacularly. Before we begin, a quick disclaimer. This content is for educational purposes only, not business or investment advice. Company references are from public sources for educational commentary. Trademarks belong to their owners. Consult qualified professionals before making business decisions. Here's why OpenAI is betting everything on a model that doesn't work yet. OpenAI launched ChatGPT in November 2022 as free product with no monetization plan. Within 5 days, 1 million users. Within 2 months, 100 million users. Fastest consumer product growth in history. No ads, no subscription, just pure compute costs burning hundreds of millions. The cost structure is brutal. Every ChatGPT conversation requires massive GPU compute. Industry estimates suggest $1 per conversation for GPT-4 level responses. Free users generate zero revenue but full costs. Even paying users at $20 monthly barely cover their usage if they chat frequently. Do the math on 500 million users. If even 100 million use ChatGPT actively and average 10 conversations monthly, that's 1 billion conversations. At $1 per conversation cost, that's $1 billion monthly in compute alone. $12 billion annually just in inference costs before salaries, research, or anything else. Revenue doesn't come close to covering this. ChatGPT Plus subscriptions at $20 monthly. Estimates suggest 10 to 20 million paying subscribers. Call it 15 million subscribers at $20 monthly equals 300 million monthly revenue. 3.6 billion annually from subscriptions. API access generates additional revenue. Developers pay per token to access GPT models. Enterprise contracts add more. Total revenue estimated around $2 billion annually across all sources. Against $5 billion in costs means $3 billion annual loss minimum. The losses are accelerating, not shrinking. Training GPT-5 reportedly cost over $1 billion. Each new model generation costs exponentially more to train. Inference costs keep rising as usage scales. Salaries for AI researchers hit 7 figures. OpenAI's burn rate is increasing while path to profitability remains unclear. Microsoft invested $13 billion for minority ownership and exclusive cloud partnership. OpenAI runs entirely on Microsoft Azure infrastructure. Microsoft gets 49% of OpenAI profits until they recoup their investment plus agreed return. Then ownership reverts to different structure. This creates bizarre incentives. OpenAI loses money on ChatGPT. Microsoft makes money selling them Azure compute. Microsoft profits from OpenAI's losses through cloud revenue. This only works as long as Microsoft believes the long-term payoff justifies subsidizing the burn. Other investors piled in. SoftBank, Thrive Capital, Tiger Global. Others invested at $150 billion valuation. They're betting OpenAI becomes the next Google or Facebook. Winner-take-all platform that dominates AI for decades. If that happens, current losses are irrelevant compared to future monopoly profits. The bull case is network effects and data moats. More users means more conversations means more training data means better models means more users. ChatGPT already has 500 million users generating proprietary training data. Competitors starting today can't replicate that dataset. OpenAI also has brand dominance. ChatGPT became synonymous with AI like Google with search. That brand value creates user acquisition advantage and pricing power competitors lack. People default to ChatGPT because it's what they know. The bear case is commoditization destroys margins before profitability arrives. Anthropic's Claude matches GPT-4 quality. Google's Gemini is free and integrated everywhere. Meta's Llama is open source. If AI models become commoditized, OpenAI can't charge premium prices or maintain market share. Second risk is compute costs never decrease enough. Current bet assumes GPU costs drop significantly or inference efficiency improves dramatically. If neither happens, unit economics remain broken forever. Can't lose money per user and make it up in volume. Third risk is regulation restricts monetization. If governments ban certain uses or require expensive safety measures, costs increase further while revenue options decrease. OpenAI already faces regulatory scrutiny globally. Fourth risk is Microsoft relationship constrains OpenAI's strategy. Running on Azure exclusively limits flexibility. Profit-sharing agreement means OpenAI doesn't capture full value of success. If relationship sours, OpenAI loses critical infrastructure overnight. The path to profitability requires radical improvement in unit economics. Either inference costs must drop 90% through better chips and algorithms, or revenue per user must increase 10 times through premium features and enterprise contracts, or both. OpenAI is betting on enterprise AI being the real business. ChatGPT consumer product is marketing. Real money comes from selling AI to businesses. Custom GPTs for specific companies. API access for developers building AI features. This is where $20 per user becomes hundreds or thousands. Early enterprise traction exists. Companies pay OpenAI substantial sums for custom implementations. Corporate ChatGPT deployments. API integration for customer service. Software companies embedding GPT into products. This revenue is growing fastest. But enterprise sales take time and face competition. Google, Amazon, Microsoft all offer enterprise AI. OpenAI must win enterprise deals while continuing to burn billions on consumer product that loses money. Threading this needle is extraordinarily difficult. The existential question is timing. Can OpenAI reach profitability before running out of investor money? $5 billion annual burn means they need continuous fundraising at higher valuations. Eventually, investors demand path to profitability, not just growth. If AI models commoditize before OpenAI achieves profitability, the entire thesis breaks. Investors lose tens of billions. Microsoft's bet fails. ChatGPT becomes cautionary tale about unsustainable growth. If OpenAI successfully builds unbeatable moats through data and brand, becomes the AI platform everyone uses, charges meaningful prices while reducing costs, then $5 billion in annual losses becomes a relevant footnote in history of most valuable company ever created. For investors, this is binary outcome. Either OpenAI becomes trillion-dollar company or worthless. No middle ground when burning $5 billion annually. For tech industry, OpenAI proves you can raise unlimited capital with broken business model if the vision is big enough. Whether that's innovation or delusion depends on what happens next. Now, next time on Business Decoded, we're examining NVIDIA. A $50 million gaming chip accidentally became the foundation of the entire AI revolution. How did graphics cards for video games become the most valuable monopoly in technology? OpenAI loses $5 billion every year running ChatGPT. Costs $1 per conversation, charges $20 monthly for unlimited usage. 500 million users generating $12 billion in annual compute costs. Revenue only $2 billion from subscriptions and API access. $3 billion minimum annual loss growing larger. Microsoft invested $13 billion betting OpenAI becomes next Google. Other investors piled in at $150 billion valuation. Bull case is network effects and brand dominance create unbeatable moat. Bear case is commoditization destroys margins before profitability arrives. Path requires either 90% cost reduction or 10 times revenue increase. Enterprise AI is real business model. Consumer ChatGPT is expensive marketing. Either becomes trillion-dollar platform or spectacular failure. No middle ground at 5 billion annual burn rate. And that's how they built it. If this helped you understand business better, subscribe for weekly deep dives into the world's most successful companies. Thanks for watching.